Hi, everyone. This is Peace, Love, Music here with another episode of Learning TA with Landy. Landy's going to come on and teach us about continuation and reversal setups, which is really good to know in volatile markets, and especially when we're actually dealing with some of the price action we've been dealing with lately. So, and here he is now. Landy, how are you today, man?
I'm doing well. Was just sharing out the this particular stream with a few different groups, so that some people who might be interested in kind of how to maybe define some of the criteria for themselves can do so. Look, this is a very important one in my opinion. After weeks and weeks and weeks of the first 4 weeks of kind of going through the basics, and then weeks of hammering those basics in and then expanding on them. um, Now we're to a point where we have the opportunity where Bitcoin and traditional markets and many altcoins are in a strong daily downtrend, and we can start to define criteria for continuation of that trend and possible reversal setups, right? And it's very, very simple, actually. There's a few different ways to approach this, but the first thing that I do is I look at, okay, where's the downtrend occurring? Is it occurring on the weekly? Technically, yes. Right now, there is a downtrend on the weekly. So there is some weekly criteria that could be met, but it's usually not as fine grained, right? Because we can get more information below the weekly to kind of give us our edge as to when the weekly might set a low and maybe reverse off of some key areas. But there is some information here that we want to know right off the bat. So in terms of trend, support and resistance, volatility and momentum, we should check on the weekly and then work our way into some of those lower term timeframes. And that should be in the context of where trend is on a macro time scale, like a monthly. So for Bitcoin here, we can see that Bitcoin is in a monthly uptrend still. We have higher lows and higher highs still. So it's still a healthy uptrend. For those that are freaking out about this market, what they're trying to do, for those that think that it's going into a bear market, they often are they're often front running the narrative of the bear market by thinking that maybe possibly that could have been the high on the monthly up there at 109,360 or so. Right? It's not a confirmed bear market. The setup is not mature enough yet to call it a bear market. We are still in an uptrending structure on a macro time frame. And a lot of what's freaking people out right now is this weekly. And we need to check on that so that we can contextualize what it is that we're going to look at on the daily for setups, and how that might play into some lower term time frame setups and criteria that we might want to define, especially if we're traders. And I do want to specify that I'm an active trader. I trade long and short in these markets. That is not everyone. There's a lot of people that are just investors. A lot of people that are traders, but single-sided traders. They buy spot and they sell spot, right? And that's where does all the opportunity come into play for somebody who is, just actively investing in terms of their buying and selling? Well, the opportunity lies in the downtrends, not the uptrend necessarily, unless you're catching breakouts and stuff like that. So realistically, where you're looking to actually find areas of interest, if you're an investor, is in the downtrend. Like where are you comfortable entering a play and adding to that play, or DCAing it so that you can take profits later, right? If you're an active trader, often many struggle with, okay, I was nailing it in the range, and then I nailed my short position and I closed it, and then it continued down, but I was long and I got wiped out of my long, right? Or, they're short and then they were short in the range, it continued up. They got wiped out, and then they tried to short again, get wiped out because the actual move is still ongoing. So what we're going to do is talk about how to gauge that continuation of a particular trend, whether it be uptrend or downtrend, and then what criteria you can start to define and update during the life of that trend that can start giving you the signs that it's going to reverse. And in this case, on the weekly, we do need to define a few things here. So we were moving from a compression or consolidation period in price action to a big expansion to the upside here. And I do want to, I want to call this out because a lot of people get this a little confused because they see this big move down. They're like, this is expansion. No, it's daily expansion, but this is actually weekly compression on the bands here. It is volatility expansion within the bands from the upper second standard deviation up here to the lower second standard deviation at this particular moment. And we're not seeing aggressive volatility expansion outside of the lower second just yet. And we did not see continuation to get volatility expansion outside of the upper second. So this is still a compression phase in terms of our band volatility levels. And this does mean that when we move from expansion into compression, we typically will see like what we saw initially in the first two weekly candles, trying to hold up around the lower first. Likely, if the lower second is hit around $75,000 to $76,000, that's likely where we're going to see at least timeframes below the weekly start to try to hang on to these areas during this compression until we see confirmed re-expansion. So there's some pretty simple stuff to kind of identify here, and that is where is the closest support and what was the magnitude of this move off the higher low down here. Well, the magnitude of this move was 108%. So we literally went from a price point of 52,530 to 109, in this case, 109,360 or so. And so far, we've experienced a drawdown of about 30% here, almost to the T. In fact, it is 30% as of the most recent daily low, which came in, I think, during today's session early yesterday. And in this case, this is basically mean reversion back to support, although it hasn't quite hit support yet. And it still might, and that's what we're going to evaluate. Or it could front run that support and try to pop back into range up here near the consolidation. And there's some areas of support and resistance that we can define on the macro time frame that can help us on those lower term time frames where we can get more fine-tuned and granular in terms of our criteria of what we're looking for. So the first thing I'm going to do is I'm going to define the weekly highs, and I do mean closing highs. This right here before the breakout is not a closing high. So we have 1, 2, 3, 4 closing highs, and we can define those here by just kind of taking the entire zone from the closing lower high down here, the last closing lower high, to the actual swing high of that range. And we get a much wider range, although you'll see that I call out this high first, so we can have like a little checkpoint in there of around $68,000. But essentially we have a range between 64,250. We've got a nice little top side lower high up here at around that 68,250, and then we have the 73,835 high of this consolidation range. And we can say, okay, those are big areas. And if you want to throw down another zone here around this high at $70,000, be my guest. That is a relevant high area to pay attention to. You can even get more fine grain and throw a nice a line down around 71,313 on the closing highs before the 73,835 high. It's up to you. I take it as one big zone, and you can be as granular as you'd like. We're just, for now, for our purposes, we can get more granular on lower term timeframes if we want in terms of supports, but we're going to get into evaluating first anyway. So we have the main support on the weekly down here just below the lower second standard deviation. Now we could see dailies swing under here and hit this big area of support. Now, in many cases, we've only seen around this little bit of a lower, this little bit of a higher high. Didn't quite close the higher high up here or lock it in. It just went from a swing high to closing higher low. But there's somewhere around 65,000, which of course was the first top from 2021, kind of right in that area around $65,000. So we have a lot of important areas in here that could get retested. We don't know yet, right? And any closes below the lower second at around 70. If this candle turns red, it's going to be around $75,000 by this lower second for this week, would be expansion into an area of support. So this would be our area of interest for support. We need to know where the resistance is overhead, and it's going to be the weeklies up here of the range. And it's essentially going to be this weekly at 93.5 to the low here at $89,000. So we can zoom in here and we can start defining the resistance here overhead, because this is the range that we just fell out of. This was prior support. It's now lost, and it will act as resistance at minimum in the lower term time frames. Then we evaluate our confluences. We have the lower second slightly above the support down here. We have the lower third right in the support right there, in a compression of the bands, meaning that initially we would be looking for bounces at each one of these levels. On a closing basis, if we close below, it's expansion into support. We have the basis band on the weekly right at around $93,500. That does need to be reclaimed. That's also the basis band is the 20 simple moving average. We'll probably get in deeper to moving averages. We've touched on it before, but at some point we'll get in a little bit of a longer conversation about moving averages. And then above there, we have another area of resistance between the close at around 102,500. We have the other close here at 104,445, but then we have the swing high up there at 109,360. So essentially, we can encompass this high side structure in this closing lower high structure to the higher high swing here as another area of resistance. So now we got three major zones, and this is going to help us kind of define things on a longer term time frame when we go and take a look at the daily here. And when we look at the daily, we can kind of see how prices interacted with these weekly levels as it stands right now. And in fact, we can switch out a little bit of this. So this low we can turn into a horizontal, because we can see how it interacts with some of the
I have
prices.
a quick question.
Go ahead.
How do you decide how far to go back when you start measuring? I mean, is it based on where the highs and lows are, and where the prior highest high?
It's based on the current trend in this case. Or if there was a previous trend, if we still had the prior cycle, if we were still around the prior cycle's downtrend from the most recent downtrend on a macro time frame, then those would be the primary resistances as Bitcoin went up to them or came back to retest them. So like the prior cycle would be what I'd reference. In this case, there is no real, we've already tested all the prior cycle stuff with this structure here before breaking out to form new structure in blue skies. So now this is going to be the relevant structure, and this is the relevant structure because we've already tested prior cycle structure here. We've created new structure here. So this is the most recent and relevant structures that we're looking for. So I look for the most recent to the left in this case. If there's any historical structure further left, then we would be referencing that as well. Right. So if there was structure from 2021 up here, instead of just down here, when we were in this consolidation, we were referencing this structure over here for resistance on the way up to it, and then as supports on the way back down. Right.
Okay, so we're referencing that doesn't, it's not really relevant unless we lose this structure potentially.
Yeah. So we don't really need to reference this anymore because this has been thoroughly tested for, better part of 8 months last year. Right. So this is going to be the most relevant structure for the moment. And I'm taking the high side because when you're headed down, you work from highs to lows, right? So you work from the high side of the structure as you're approaching it to the lows first.
Makes sense.
Right. And then for the overhead structure, you work your way from, the way back up. We work from the lows to the highs of the structure, and we can get really granular if we want to on some of this too. Let's go to the weekly and just mark this out with a nice horizontal, so we have a little bit of a we have a little bit of a bigger area to reference over here for the full structure up top. Now, from the daily perspective, we can use the weekly to define some pretty easy criteria, right? We can also see where the daily Bollinger Bands in this current downtrend line up with the macro structure on the weekly. So we can see the lower third standard deviation is a volatility play right at around that 71,750 or 71.5 when this candle was red. We saw the lower third stretching out into this. This would be an extreme on the daily, likely to get a bounce because it'd be hitting extremes on volatility. Closes back below here will define for continuation to test down here. And then what do we need to see in terms of breaking the trend, the downtrend to the upside here, right? Because this is just a powerful downtrend as it stands right now. We had one higher low close in here, right back to a lower high. So when we're looking at trend, and it always starts out with trend, right? We have this downtrend. We had a nice pop up, but still a lower high at $95,000. We swung down and got that 81,444 swing low. We actually set a closing low because we had the close here coming in at 86,161 rather. And then the next daily candle closed above the swing high, which guess what this rejected originally? It rejected $89,000 or the low side of the range. We came back up into the resistance. What did we need to see? We needed to see 93.5 or 93,563 taken out on a close to get back above the weekly close here. So this zone was a primary zone of resistance. Did we get above it just prior to that? Yes, but then immediately rejected. So when this rejected, this became a high, a lower high in the lower term timeframes, and then became a lower high in the daily. After we put in this higher low, what bulls needed to do is reclaim the weekly close open here at 93.5 or so, and then take out $95,000 to break that lower high. It didn't do that. In fact, it went right back into resistance up against the daily basis band and rejected and put in a lower high. So then the criteria was hold this low and hold the close open. It kept wicking the close open, started to lose it in lower term timeframes, ran the low, and then ran lower by running this low at 78. So we were looking at, when this higher low came in after the big pump up to 95, we're talking about, roughly, $80,000 to $82,000 is where you need to look. It hit at 81, basically 81.5, slightly under there. And the criteria was if we come back down, watch 80 to 82. If it's lost, we're going to run this next low, right? So we're just checkpointing things in our minds. So in this case, what are we going to look for continuation to the downside on a daily time frame? Now in lower term time frames, any closes below the daily here at 78,167, and we're looking for price to head down lower in the lower term time frames. Now on the daily, if we haven't already ran lower to go and hit some of the important areas, like on the weekly, there's the lower second at right around $75,000 to $76,000, right? Well, we could always go back and define the weekly, the macro criteria for our volatility levels of interest, which are moving around as the candle is open still. We could say, okay, it's if price were to move back down, this is likely going to be around 75 because that's what it was earlier as price was moving down towards it, right? So we do already have a reference when we saw price moving down, when price hit its low of today at around 76,555, right? So we've got kind of this zone for the lower second at like $75,000 or so. And we can go to the daily and we can take a look. It's like, that's right around where the lower second is, but it's very close to this support. So let's define some criteria for continuation in lower term timeframes and then on the daily. That's going to be this swing low that we have not closed below in the daily yet, but we have swung below it. So in the lower term timeframes, when we see this low on the daily breakdown, we're watching price head down, Could it potentially hit the 75 and under to 73.835 and into the zone there for the weekly? Sure, but we're watching carefully, and if it gets regained by the daily close, then we're looking for the potential for this low to become an important low on a swing that then is going to define, like, if we close below, we're going to get continuation down. But if we keep swinging below it while failing to close below it, we could get just continuation down on lower term time frames and then start to present a low being set here with the potential of a reversal setup developing from there. So first criteria is we have to say to ourselves, okay, what's going to be our criteria? Our criteria right now is closes above 78,167. Good. Because then that means that in this case, Bitcoin would have a chance to set a low here on a closing basis. Yes, it's got a swing lower low, but we could potentially see a closing low at some point here start to develop. Well, what's the criteria for that? The criteria for right now in today's candle, the Tuesday session, we closing above $84,000, which was the Monday session high. That would also put Bitcoin back above the lower first standard deviation of volatility, which is going to continue to head down as the basis band heads down as well, unless Bitcoin were to shoot above the basis band, right? So in this case, we can define this high right here from yesterday as close above here. We will set a closing low, and then we will also solidify this low here. So we can start creating some zones here. We'll take this volatility level from the weekly. We'll turn this white so we can differentiate it here. We're going to throw on where the current swing low is in lower term timeframes by the daily lower second. And we can make this a zone. So essentially what we need to see to prevent price from falling further than the swing low is closes even in lower term timeframes above the 76,555 to 78,167 level. This is the lower term time frame support. Below here, we're getting continuation to the weekly, likely at 75, and probably under to test the prior year's range highs. So we have criteria set now. We know where we need to see a daily low set, and we know where on the daily to prevent continuation, what we need to see in lower term timeframes as it relates to the daily for closes. So continuation would be below this wick low and the current swing low of today's candle. That would be continuation to some of our important levels we picked out on the higher term timeframes. The volatility level on the weekly by the lower second, and then the big weekly areas of support, the high side structures down below.
So if it closes at or above that lower wick down, it doesn't necessarily signal continuation. It has to close below. Yeah, because you're getting the auction lower than today's daily low, right? Okay. So obviously it's continuation down, right? We're just setting the criteria. If we see continued closures, if we see closes below there, we're either likely already running 75 and maybe even the support, structure down below from last year. That's continuation. So we're just defining the criteria for continuation. It's pretty simple, right? It's not magic. It's not like you're prognosticating on like what the future is going to hold. You're literally just setting criteria. And the criteria is if it goes lower, it's going lower. Right? Yeah. So, it's like the most obvious thing in the world, but people then go like, well, I mean, that's just obvious. But if you don't define it, you have no way to formulate a plan for how you want to take advantage of it, right? Right. Well, if you think it's going to go lower, but you have no idea where it might go to next.
Yeah. What defines it going lower? You need to know where the lows are, right? Yeah. Right. So it's the most simple type of analysis. And by the way, it's the most powerful type of analysis because you're not trying to predict the future. You're saying if this, then that. If price breaks below 78,167, be aware that we might be running this low at 76,555. If we see price break below there, then we are looking for price to head to the other areas of interest or get continuation to the downside. So it's like for the programmers in the audience, and if you have any kind of programming, it's basically an if-then statement. If then else is like the most the basic statements that you learn in any programming language, essentially, right? If then, is if it breaks here, then it goes here. If it breaks here, then it goes here. Or else, if it holds this, it could potentially set a low, right? Does that make sense?
Yes.
So we've clearly defined where it would set a low. Now, what I like to see is different, right? Just because it sets a low doesn't mean that it's not going to go lower, right? It's still a downtrend.
Right.
Now we need to know, where do we break that downtrend? So if it sets a low here at $84,000, it's got a lot of work to do. And this is defining the criteria, right? And then we can evaluate the criteria once we've defined it. If it sets a low above $84,000, to break this current downtrend on Bitcoin, we need to see it close above the most recent lower high, which is easily identifiable right here in that weekly resistance overhead, right? And that weekly resistance overhead is just shy of $93,000 at $92,800. Now, I would say, even at that, even if it breaks above it and closes above it, it's got work to do on the weekly, right? But at least it would be a break of the downtrend. Then we have to set new criteria, right? So let's go ahead and define that. So this would break the downtrend up here. So we are gonna make this line green. We're gonna have green on this downtrending red chart. I said red and then selected red anyway. So we can even say, like, on this low, we can define the extremes right now, and we're closer to one than the other, right? So we can say, like, here, break below the most recent daily low, we're going to go lower and test those areas of interest we defined. And we can get more granular. Like, we could go start looking at dailies, and where did this daily close? It closed at 72, 725. Where's the other daily? There's another one at 73, 135, and then there's some closes at 70, 71 and a half, but spikes up at 72, right? Like, so we could get really granular inside of that zone to really hone in on our criteria in lower term timeframes. But for right now, we're sticking to the daily, so we know what the criteria is for the daily to get continuation to the downside, set a low, and then break the downtrend. And once we have that, we have basically all of the information we need for the daily as it relates to the weekly, right? And we're just trying to figure out, like, okay, where do things actually change in this structure so that we can do good analysis, right? And in this case, there's a lot of work that Bitcoin has to do to even set a low. It's got to get above the volatility level of the lower first standard deviation, which tends to be an area that, even on a if for those that use moving averages, the lower first standard deviation tends to line up with either the 5 EMA or the 9 EMA. For those that like that, the 8 or 9 EMA, but usually those trending EMAs is kind of where the lower first standard deviation away from the basis band typically line up. So you usually find confluence there. I don't bother putting them on here because it just makes a mess, and we already have a mess on our chart. So, but we have a structured mess that we understand, right? From there, even if it sets a low, it's got to get through the 20 simple, right? It's below, it's bearish. It's in the bearish half of the bands here. So the 20 simple is below primary overhead resistance right now. So Bitcoin has some work to do there. So lower first, if we start to see closes above there, or we see Bitcoin get a close open where the lower first heads down as the basis falls towards price, then we are playing in a different volatility zone, right? So right now we're between the lower first and the lower second until we see a close or an open back above the lower first, or a close/open below the lower second, right? And we look at these as volatility levels of interest. We're playing between the lower second and lower first. Wicks be damned. It's about closes. because we're evaluating volatility or dispersion of returns, or the strength of the move and the ongoing move at this point, right? And at this point, we're playing between that 82,800. If Bitcoin were to rise a little bit, we'd probably see this slightly adjust to 83. And then the bottom side here by the lower second, around 77 to 77,300 or so. And in this case, if we start seeing Bitcoin back above the lower first, either today or if it closes and opens and the lower first opens above, or the price opens above the lower first, meaning because we have a green candle right now, if it closes like this, we'll see the lower first continue down while price closes higher. We could get an open above it, which would allow us to start looking at the volatility range of interest between the lower first and the basis band, right? And that would actually be preferred. Green candle, lower first heads down with the basis, and then we see Bitcoin try to set a low. That would be a much better shot for Bitcoin to play back to test trying to set a daily low here. And then of course it's got to contend with the basis band, the overhead resistance on the weekly, and this lower high to break that downtrend. So that would be your trend reversal setup. So let's just kind of game things out here. We can make a few educated assessments based on what's happening right now, and we can just kind of just spec out trend, right? So we've got the little bit of a higher high, but still got the close inside of this high up here. So we can mark that high to this swing low, to this swing high, to the swing higher low and lower high. So where are we right now, right? Well, we've got what amounts to, actually, even though price is testing the low down here and has tested lower, we actually have a bit of a trendless structure in this case, where we have the downtrend, right? But we have a higher low with a lower high. Now we're getting that lower low, which would usually signal continuation rather, to lower prices, right? That's typically like this would be your deviation of that trend with that higher low that failed to make a higher high and just resulted in a lower high, and then we continue to a lower low. But because we're right here, right around this primary low, if we don't see it close below, we're only looking for continuation in lower term timeframes, where we could see some of those targets still hit to the downside. They're fully in play, 75 and under, down to 70 to 75 if you just want to use even numbers, right? Still absolutely in play. But if we don't see closes below that 78,167, then what we're looking for is the potential for a low to be set, and then trend reversal setups to emerge from there as a possibility. And those could play out in a few different ways. As it stands right now, we know that we need to see this lower low be set, right? So we can say, okay, one path is just continuation down, right? Just continuation down into the supports. We get more lower highs and the trend continues down, right? That is one path. We know this based on what we've just established, right? So there's that path. We now also know that we could potentially see another lower high, right? We could bounce, set a low. So it's still a lower low close, lower low swing, and then we get another lower high, and then we get continuation down, right? So that's a third scenario. And then we have the other possibilities where we could see, these bearish trends start to play out into a bullish trend where we see another lower high, right? But then we see higher low equal low structure, and then takes out that lower high and starts to head up, right? So we've got two fairly bearish scenarios that could absolutely play out, right? So we can, say this one is bearish, this one is bearish, and this one would be a trend reversal setup, right? And these, of course, are just examples. Now, there is, even within this structure right now, there's the possibility that there could be, this could hold, right? Like we could see this hold, right here. And then we get another lower high to higher low structure, right? So we could potentially see, another lower high come in like right around here and then try to do higher low its way out of here, right? So we could potentially see that, right? So we see this area hold, we get another lower high, higher low or equal low. Doesn't really matter if it's a higher low or equal low, as long as it doesn't close below. And then that's what we look for to try and take out the lower high that would be closer. And then of course, there's another scenario where it bounces from this lower low structure and takes out the green zone up above, right? Or takes out that, we see it bounce from here and then it just goes up and it makes a higher high here. And then what do we look for once it breaks the downtrend? What we're evaluating from there is either a higher low or an equal low and then continuation above the higher high, right? Because we're looking for that lower high to be taken out to break the trend on a higher high closing basis, preferably. And then we're looking for higher low or, again, equal low structure. And then we need to see the higher high taken out, right? Because this would be a higher high than the lower high. We get higher low, equal low structure. For continuation, we need to see closes and continuation above the most recent higher high. And that's really the crux of evaluating that. And once you understand how those things can play out and you can kind of draw it out in your mind or you draw it out on the chart, and those aren't all the scenarios. Those are just a couple, right? But what we're essentially looking for is a structural change. Break of the downtrend, higher low, equal low structure, or continuation with another lower high, lower low, right? And however that looks really doesn't matter because we have already now defined our criteria and we can start evaluating other things. Like, okay, are we still getting volatility expansion to the downside? Yeah, we are. Moving average is kind of flattened out, which is a little bit of a warning that this could potentially start to try to form at minimum a low here. Doesn't mean it will, but the potential is on the table now. What else? We could take a look at momentum metrics. Okay, it's still heavily down below and in the bearish control zone for momentum on closes below $87,000 as it stands today. But if we get a green candle and we're still holding this low side, right, between 78,167 and 76,555, we could potentially see that we might get the momentum indicator continuing down to a more attractive number that's closer to price action, right? Maybe it's 80,000, maybe it's 82,000, right? So there's that. And then we could potentially, we in lower term timeframes can define criteria that might be able to give us more information about if the 12-hour closes like this, then the daily has a higher percentage chance of closing like this, whether it's up or down. And we can define that criteria just by going down the time frames to the 12-hour in this case. And we can see that we got, a big expansion down, big mean reversion right into resistance, deviate the resistance, come back down, try to hold this area of support, put in a higher low to lower high right in the thick of the resistance, and dump right back down to the lows. Expansion, initial expansion, right back into the low side structure here, creating its own, closing above the wick low there. So we now have, we have essentially the same kind of picture on the daily as we do the 12-hour, right? But more candles means the setup's going to be a little bit more mature than the daily. And in this case, we can evaluate some things. Okay, so are we still getting expansion? Yes. We're starting to see that it's expansion into the excuse me, the initial area that we found some support and set a low. And you can define this criteria further on the 12-hour for yourself. You could say the close open here and say, okay, close open to this swing low was kind of the area of interest here, right? And we can take all of this stuff and we can package this up on our charts, by the way, in TradingView, we can package this up and we can call this daily into weekly evaluation, right? So we can just say, we can go daily and just plus weekly. And now we can, we can always reference this by turning this on and off. We can make a little folder with all of our stuff in there just by highlighting each item, and then we can turn this off. And we've got a clean slate again. We can say, okay, what's the criteria for this 12-hour? Let's go ahead and mark this low as like our red zone. We don't want to see closes below here because we'll see continuation down, right? We can say, okay, for the 12-hour, is it any more attractive here in terms of a downtrend break? And the answer is absolutely not. It's still up here at just below $93,000. But we can start to define this as an area of interest in terms of zones, and we can recolor this as like green. This will break the downtrend on the this lower high. If closed above this zone, would break the downtrend, right? So we can just get down there and we're defining the criteria. We're hunting setups for continuation. We're looking for closes on the 12-hour for 12-hour continuation below the lower second. That would also break below this wick low over here. And that would be continuation to test the most recent lows and lower, right? So that would be your continuation down to minimum test the most recent lows at 76,555 and lower down to some of the areas we identified on higher term timeframes. Let's go ahead and get a new arrow up here. Okay. So we can define this. We're just looking at the 12-hour and we're making some zones for ourselves just to define that criteria. That's all. We can color this one red. This is like, hey, anywhere below here on a close, especially, we're getting continuation down if we hadn't already seen it. And we've got that bottom side there. Now, we have some areas of interest kind of in between. We have this low to contend with. So when looking left, we don't have too much in this zone. We have some areas over here of interest, but it's just overhead resistance and downside supports, right? This is its own structure. And locally, we start to get encouraged if we see this low reclaimed, right? And this is kind of where things are kind of having trouble at the moment. It's a tight zone down here. We can take and kind of define this criteria here, and you'll see that this low is encompassed right here. This low swing is encompassed with this closing low to wick low. We can just paint this yellow. And now we've got the Landy's classic stoplight scenarios for support and resistance in this area, right? And we can see that it's pretty tight down here on the lows, which, by the way, means that if we, it's still heavily in the thick of resistance, and it's kind of at its emergency lows to prevent continuation down, right? But if we start to see this low at $83,000, almost $84,000, that number sounds familiar, doesn't it? Sounds like the daily that we just talked about, where we need to see the daily low set, right? So now we have confluence on a 12-hour time frame. If we see right around this close open higher low structure regained, that's confluent with setting a daily high, a daily low, right, at $84,000, which was yesterday's high. You see that that's right here, $84,000, right? This was yesterday's high. And now we have confluence. So we know that if the 12-hour starts closing above here, we've only got 6 hours to go for the 12-hour. We also only have, how many hours to go for the daily. If you're a little confused on time zones, you can look and it's the same. It's 6 hours. We're in the second 12-hour candle of the daily. So we know that if by the end of today, if we see closes above this yellow zone, the low will be set for the 12-hour, and we will see a daily low being set. And then we can start looking to other areas of interest, right? We have the basis band kind of falling in line with this common line of resistance here on a close. We even saw this getting some resistance here on the open, and a little bit of a retest that failed it right around the basis band at 86,540. Anywhere above there, we're looking to the upper first, which is just below the lower high, to break the daily downtrend and the 12-hour downtrend. So we can look at the likelihood of this too. We can start evaluating other criteria. This is a heavy downtrend, and until we see a low set, it's just biased to the downside, right? And we don't have a low set yet. We don't have a low set here. So until we see a low set, it's just biased to the downside for continuation, right? If we see a low set, we're looking at that low coming in and setting not just the 12-hour, but also the daily low. And then we can start looking to overhead resistance. And we can checkpoint ourselves with the basis band right in the middle there. And then we can add extra information. If we start to see volatility cooling down in the next close, while we get a turn in stochastic momentum and possibly a low set, or maybe it's still hanging around its low side, not pushing lower, then we can look to the pivot. 12-hour pivot is any closes above 81,260 or so would get an initial cross back to the upside with momentum divergence here. So we have a relative, we have one low and then a lower low, and then we have a momentum here. For momentum, we have a low, and then possibly on closes above 260 or so, we would see a higher low on momentum. That would be a bullish divergence. We would need to see the following 12-hour candle close above the momentum pivot though, because this would only be an initial cross up. We would still need to see a low set, and we'd need to see an additional close for momentum to get rolling back to the upside. And in this case, we know the criteria. So we want to see a few things. We want to see volatility continue to cool down. How does that occur? As price moves back to the upside towards the basis band, and the basis band moves down, volatility will naturally come down, right? That's known as mean reversion. That's where price can also sit sideways and the bands can come down to it, or the basis or the 20 simple in this case can move down to it. And that's also mean reversion, but it's better if price is rising towards it. That's more aggressive mean reversion, or a return to the mean average. In this case, the basis band. That would cool down volatility. We need to see a low set, right? So if we don't see a low set, but momentum turns, not much to be made of it. Be above $84,000 and momentum is turned. And then we get the additional closure for confirmation, meaning that if we close above 81,264 right now, in the next 12-hour candle, we need to see the next candle close above whatever the updated pivot is, which would likely be lower than the 81, because price is trading above its lows right now for the moment. From there, we just wait and watch the closes. But we can go more fine grain, right? We can go down some time frames because we have two 12-hour candles in a daily, right? And we have 3 4-hour candles in a 12-hour, which gives us 6 4-hour candles in the daily, right? So we can go to the 4-hour and we can take a look and see what's going on there. And we can see that the 4-hour is in this heavy downtrend, right? And it's actually got a lot more criteria that we could potentially see to break the current downtrend that is very similar to the 12-hour, unless we see some issues here. If it puts in a lower high here by locking it in, which it's going to be tough for it to do, but at minimum it would be a swing lower high as it relates to this lower low. But it would be encouraging to see Bitcoin closing back above, 80, what is this, 82,276, but it doesn't do much because the actual closing lower high is the same as the daily, and the 12-hour right around $84,000. So you need to see the 4-hour start to break above there and get closes. But we'll get 4-hour closes before we'll get the 12-hour close, right? So we can get an early bias on what might occur on the 12-hour, which then gives us an early bias of what might happen on the daily. Same goes for the downside. To lock in this lower high on a close, well, obviously trading back below 80, the 80,445, which is the 12-hour close open, is going to give us a bias that it's probably going to try to close a lower high below $79,000 and start to sweep the lows and possibly lower, right? So it's still in continuation of downtrend territory right now. But we do know that the criteria is the same as the 12-hour and daily, close above 84. It'll break, it'll start to break some of the areas that it needs to break. It'll break the downtrend for the 12-hour and 4-hour here, right? As it stands right now in this current 4-hour candle. And then we can start to look, okay, do we have anything interesting going on? Well, we do have mean reversion in play, which means that price is moving up off of the bottom side of the bands towards the basis band while the basis band is moving down. So we're getting a little bit of a volatility cool down. We do have a low set down here on the low, on that lower low, and we have momentum pointed up, but it's still a downtrend, right? So 77,668, and so basically 77,700 is the pivot for the current 4-hour candle, right? And then we can kind of we have 4 6-hour candles in here. Let's see where the 6-hour is. We can look, it's the same criteria as the 4-hour, basically the same criteria as the 12-hour, basically the same criteria as the daily. So we really have a very clear picture of, in the lower term timeframes, we can easily see how they're going to affect those higher term timeframes. In this case, the 6-hour is the same pivot as the 4-hour at 77,700 or so. And it's going to be all the same criteria for this to try to move back to the upside. And we even have the basis band right at where the low that needs to be recovered on that 12-hour at $83,000, almost $84,000, right? Basis band is kind of right in there in the thick of the resistance right now. And we can get as fine grained as we want with our criteria depending on how we're trading. Right now, this is a downtrend. And even if it breaks the downtrend, we need to look for higher low, equal low structures. So I'm not trading this as long-term trades back to the upside, right? I will be looking for wherever the trend break happens, higher low, equal low structure. That's where I get into my trades for longs. And that's just me. That's my criteria. There's a lot of other stuff that goes into that. It's not as simple as just trend. We can start evaluating other things like divergences. Currently, we have one main drive of bullish divergence coming off of this downtrending structure. There is some other bullish divergences from this downtrend prior here, but because this did break that downtrend with the lower low, higher highs, higher lows, it set up for a trend reversal, right? So this was building up bullish divergence that has already played out with the higher high, higher low, lower high, and then resume the downtrend. So we need to see some nice bullish divergence starting to form. We've only seen one drive. I'd like to see 2, possibly 3 or more bullish divergences like what we saw over here to really pop price up in a meaningful manner. And that's all going to start to happen. Bullish divergence does not matter if we're not getting some break of structure. So still downtrend, right? We need to start evaluating, is this the same look that we're seeing on the 6-hour? Yes. Basically one drive of in-trend bullish divergence. And that means for this current downtrend, not this downtrend over here. As this current downtrend building bullish divergence is where it's most powerful. Let's look at that 12-hour for RSI. Now the 12-hour, we could start to see, because this bottomed out so much, this might be a more relevant bullish divergence if a low is set here, because this is significantly higher RSI levels, which isn't necessarily bullish, but might be good enough to set a low, pop price up. Daily, same kind of thing. Daily is just a big downtrend with that higher low sticking out there like a sore thumb, but a very big divergence between price and these lower lows and RSI. So the move is running out of strength to the downside. It's also not, it's not looking as though it's looking as though it's looking to wrap up at least the daily move to the downside and possibly pop up into at least another lower high, maybe go for a higher high at minimum, try to set a low pretty soon here in terms of time frame. So we're just taking and aggregating all of that information to form our thesis around that. And then as we get into those lower term timeframes, we can start to define the criteria based on the higher term timeframes for what we want to see, what the trend is, where the support and resistance is, where the volatility levels are, and whether or not where we want to take trades and where we don't want to take trades, so we can formulate a plan around it. And your plan is going to be different, whether you're accumulating or whether you're trading, right? If you're accumulating or investing, your plan is going to be different than whether you're trading. I am buying at $80,000 and under very heavily in larger and larger lot sizes as price falls for Bitcoin. Me personally, as an investor. As a trader, I've been short since, well, this has been pretty well known here and many other places. I've been short since the lower high up here. The lower high also spiked essentially the daily close open and failed at about 106.5. And then once it locked it in and started to break down, I added to that position. I added on the failure to reclaim $100,000, right? So I kept adding to short. So I've been short for a very long time. But I am getting into position on the spot side as an investor on the other side by actually buying coins. The short is, in this case, a big hedge. So I hope that didn't put everyone to sleep. But,
no, it's all. I mean, it's really no. It's really good stuff, and it was all. I mean, it was all basically just showing the same stuff at the lower time frames, but that does have. It shows things differently, so it makes sense that people might want to. So if you're trading probably pays a little bit more attention to the lower term. It's all important. You're going to start with the larger term timeframes to get your target zones. Yes. But the more you drill down time frame wise, that becomes a little bit more actionable in the short term for trading purposes.
Yeah, because we've talked about this before, and you can bring us back unless we have any questions coming from chat with it, which we clearly don't, or we can always go back to the chart. But one of the big things that I want to stress is like there's different ways to take advantage of things, and I evaluate. This is how I evaluate, because all of this starts to set up my trading plan for scalps, which is scalp long, which a scalp is an intraday trade, meaning that it is a trade that is opened during one session, like a daily session, and closed within that same session. And I can scalp long, I can scalp short, I can scalp against trend, meaning a counter trend scalp. I can scalp with trend. Those are very low term time frame trades. Sometimes those will turn into swing trades. Depends on the trade, right? But a swing trade is a longer term trade, typically a day or longer. I've held on to a very long term swing trade in terms of my swing short, right? And all of the analysis that I'm doing is just so that I can formulate what I want to see for criteria of for those trades. And I have a checklist for myself personally, based on my risk profile for taking a swing trade long or short and a scalp trade long or short. And sometimes one will feed the other, and typically it's a scalp trade will turn into a swing trade. But often if I already have swing trades open, I'm just scalping along the way. And I don't have to, because I'm already in swing trades most of the time. So once you're established in your swing trading routine, your longs and your shorts, and when you're going to close those longs and switch shorts, switch short, all that kind of stuff, then I might scalp the move and in the lower term timeframes, even against my swing trades. And maybe those will turn into like what I was doing in the range up here was bracket trading. I was essentially going short at the highs and long at the lows. And then once one side breaks, you just let the other side go, right? And then making money scalping along the way. But that's not for everyone. That is a very specific style of trading It's very advanced. You have to pay attention to what you're doing constantly, and you're usually managing positions all day, every day. You usually don't have to manage the swings too much. Once you set it, you forget it. You just set your stops, set your take profit zones, and where you're going to re-enter. And then, but scalps are very time intensive. It takes seat time. You can't walk away from a scalp position.
Right.
You can't go to sleep with a scalp position. Like those are usually lower term time frame positions that you're taking that are going to need, it's in and out, take your profits and go. Right.
And it's not good to set one of those up like right before you have to go pick up your daughter from the mall.
Don't do that. Yeah, don't do that. It's seat time. It's butt in seat time, if that's the case, right? And you know, Bitcoin trading towards $82,000 is encouraging to try and set this low. But realistically, if you look at this trend, nothing has changed. This is a downtrend that is still showing the signs of continuation. But we've now done what? We've defined the criteria that we want to see to set a low, and to set and where continuation is going to occur, especially on a daily close, right? We have daily expansion still in play to the downside until we see this start going back into a compression. You know, this is expansion into a weekly that is compressing in terms of its volatility for the Bollinger Bands. Volatility within the Bollinger Bands is picking up, but it's still compression. So we're getting big volatility expansion to the downside into a weekly that's compressing in the context of a monthly that's in an uptrend. So like in putting multiple time frames together, which by the way, this was my Trojan horse for putting multiple time frames together for everybody, because this is usually where newer people or even people that have studied some of these systems have trouble is managing the context of those multiple time frames. Always work your way from the higher time frames to the lower time frames. You can get as granular as you want with your targets, and mine personally are very granular. Like I try, and now I'm not knife catching or top blasting, you know, for the short side or the long side. And top blasting is usually buying, but in this case, top blasting on the short positions for the top side. But you know, I'm very methodical, and I do pick out specific very low. I see opportunity starting to present itself. I will drop all the way down into the lower term time frames for positioning purposes. It's all going to be, you know, is this a scalp or is this a swing? If it's a swing trade, I'm a little bit looser with it. Here's the levels I'm going to build this trade out in on the way down. I'll get my average entry into a place that I want. Once it sets, you know, once it meets the criteria, I might even just blast a whole bunch more in there. It really depends on the trade. But it's all about defining criteria. It's not about trying to predict whether things are going up or down, because by defining criteria, you're going to see those changes. And more often, you're going to be right about the areas of interest that you are looking at. It's all about the trade from there. It's like if it's headed down and you're an investor, are you selling? Like you probably shouldn't be, unless you're like way heavy in profits and you're part of you're trying to push price down and you're big enough to push price down to a level where you want to buy again. Otherwise, when price is down, it's where you're evaluating where you want to buy, right? Doesn't matter if you think that if your idea of where you want to get in is different than mine, because it's going to be personal to you. Where are you comfortable buying if you're an investor, right? And don't, you know, for lack of a better term, don't freaking full port into or blow your whole load on one level when it could potentially keep dropping, right? And often what I find is I get questions like, okay, well, it hit the first, you know, level that I wanted to get into, but I still wanted to build this position out further. And now it's going way back to the upside. And what do people do? They panic and bring their freaking cost of their cost of entry up instead of down. Right. And that's chasing, because you're not sticking to your damn plan anymore. And if you can't stick to a plan, or if you don't have a plan, you shouldn't be trading. You shouldn't be investing. I'm being quite honest. And there's plenty of people that I know that have even been successful in some manner in trading that go in without a plan. And I'm telling you, YOLOing will get your ass beat in markets every single time, because you're trading against professionals There's a lot of professionals in these markets, and even in, you're getting experienced traders, maybe not professionals, but experienced traders, even in smaller ecosystems, who will absolutely take advantage of you. So if you're going in without a plan, then you're at a distinct disadvantage. So go in with a plan, understand what it is you want to accomplish, and red days are for buying, green days are for selling. Okay, you define the criteria of where you want to buy and sell, but red days are not for selling. The only reason why people are selling on red days is because they're forced to sell because they weren't selling on the green days, right? That's the truth. And right. You have to remember one of the biggest
broke taking profits.
Exactly. The biggest thing is that I think if you take nothing else away from this, for those of you in the audience, on the green days, at minimum, at some point, you need to take profits and not calculate how much you could still make if it keeps going up, if you keep your full lot in. At minimum, I beg you, pay yourself your initials. Okay? Even better if your first take profit is not only taking your initials, but also some profit, right? And these are things that we're going to get into more and more as time goes on. We have gotten a how would you kind of DCA into stuff, or how would you do your bid scaling or your ask scaling, which ask is sells, bids are buys, right? There's a lot of nuance and detail there. There is no one size fits all because you have to create your own plan, but there are some guidelines over time that we're going to get into throughout this series. But I think I've just about nuked everybody's brains for today.
No, it's great stuff. Normally I would have cut you off a little bit sooner because we usually have the Art on Stack show starting at 2, but they haven't launched it yet, or at least I'm missing it if they have.
I haven't seen it.
So yeah, so I was like, Landy's dropping some knowledge. I might as well let him keep going. We got the goods here, right? We might as well get it while we can. But yeah, man, always great stuff. I really appreciate the time you take to give us this information. And you're kind of volunteering this to the community here too. So we really do thank you about this. Thank you for this. Landy bands are available. People can, if they follow you on X, they can there's a link to get access to the Landy bands. It's a free indicator that has much of the stuff that you were showing us today. Or is it just the Bollinger Band with the extended ranges, or does some of that other stuff come with it?
Everything comes with it. It's 100% free. I've had help from others that I respect in this trading game. There's devs that I respect quite heavily. A lot of the devs that have assisted with letting me basically pilfer their code come out of the Crown's Crypto Cave developer community. They created and have sold, various products through Crown in his platforms. One of the main ones being the Caretaker, who allowed me to, as long as these are free, I use his BBWP calculation, which is built into the indicator. And then the moving averages, which I almost never show, but people love moving averages. So there's an entire customizable moving average set in there. There's a super trend set, and there's some basic visual information, not signals, but basic visual information aids in the indicator. It is being upgraded with a customizable strategy portion as well soon, so that you can customize your own strategy based on the integrated information in there. Customized alerts and stuff like that. It's all going to be free. There's no gating of this particular indicator. So it is private right now until we finish wrapping some things up and testing. Then you'll be able to go ahead and grab it, publicly, as probably under a different name. I don't know if I can call it Landy Bands. Maybe I can. I don't know. one of the main reasons why I built this piece is because some people who are starting out don't have these upgraded plans for TradingView. And this indicator packages many different indicators into one, and has my little tweaks kind of built in there already.
Very cool, man. You're a legend and a scholar as far as what you provide to the ecosystem. Great stuff. You're always coming out. You're always contributing. You're supporting everybody else's stuff. So we really appreciate you. Thank you so much. I actually just looked at it, and for some reason it's scheduled for 3:00 today instead of 2. Might be something to do with the time change, which they don't recognize in Central Africa. So I don't know. It might be not a good time, or Reese might have set it up for 3 because that's what time it is in his time zone.
Yeah. Meanwhile, we're like, everything's an hour earlier. He's like, why is everything starting an hour earlier? What's going on?
Right. Everything's an hour earlier. Kitty was an hour late to the morning show. Yes, she showed up at the end of the show.
That's hilarious.
It's just how it goes, man. And it's funny because the same kind of chaos ensued 6 months ago when everything changed back then. So because Central Africa doesn't change time, but Central Europe, which is normally the same time, does change time. So for 6 months of the year, they're aligned. Then for 6 months of the year, they're an hour apart. It's crazy. But we get to experience these things as part of an international community in the stacks and broader Bitcoin and crypto ecosystem. So it's there's always different things you're exposed to that maybe make you think about things or see things a little bit differently than you had before, and that's a huge value to everybody too. Just getting to see things from a different perspective. So
what's funny is so I'm getting some DMs here like, how'd you get so smart? And look, one of the things that I am not smart. I'm just experienced, meaning that I have experienced probably all of the pain that some of you have experienced in trading at some point in my life. Glad that I got it out of the way early in my trading career when I was doing this on a level that was for others and in a professional capacity, and not my own money, because that was it was not easy. But once you learn the ropes, you never go back.
Is it easier with somebody else's money or your own money?
It's very stressful with other people's money because your job is on the line at that point.
Yeah, I can imagine that would be a little bit stressful.
Yeah,
I only handle real estate transactions. They go in slow motion. Sometimes it can be a catastrophic situation, but it's never been a result of my, knock on wood, it's never been a result of my errors and omissions, should I say.
Yes. Yeah, yeah. You can't sue me. There's nothing there.
There's nothing. Yeah, there's no reason. I mean, there's definitely, man, so much of transactional side of things happens with faith that's never really tested. You know?
What will test your faith? Markets. They're gonna have you praying to God or just completely rejecting it and walking away. One or the other. There's pretty extremes. Lately, it's been a lot of prayer signs on the timeline. Like, please, God, please help. Please, can't the dev do something? Why? Where's Satoshi Nakamoto? Can he post some? Can he pop up again and post some bullish news? Can he? Is there a way to burn Bitcoin tokens? How can we do this? Can we do anything? Please.
You're going to burn Bitcoin. It's already there's not enough of them anyway.
Yeah, right. Let's burn that supply down. Look, one of the things that I'll give everybody a little tip. The other day, just the tip. The other day, yesterday, I posted the exchange reserves chart. You probably saw it, piece, right? Kind of floating around out there.
I saw it.
One of the things is what I really impart on this audience, because we primarily get a Bitcoin focused audience here, right? Mostly stacks players, some people coming in from the outside, right? From other communities, maybe following me over from the various shows that I go to for Spaces events. The exchange reserve balance continues to fall. And that means that there's less coins on exchanges. That means that even a few coins coming onto exchanges will have a magnified effect in likely because of selling to the downside. That also means that a few, fewer coins even coming off of exchanges will have a magnified effect to the upside. And this is, if exchange reserves are falling, where are the coins going? Well, who's buying them? Institutional players. What are they going to do with them? They're going to repackage those coins, add all their fees on top of them, and sell them to retail. Okay, so understand that you have the opportunity to buy these Bitcoin coins without all of the extra bullshit, and you get to hold them in your custody. So you have a chance to, as Shiflet has said, as I have said, and as many here have said, including yourself, I believe, you have the chance to front run institutions and nation states even now, because these coins are still available on the open market. At some point, it's going to be an exclusive club with it is only going to be traded between high net worth individuals. So get in while the getting in's good. And I am talking long term. I'm not talking, today, tomorrow, next week, next month. I'm talking long term.
Right.
And
you just look at it from a broad perspective. We have from a year ago, even a year ago, we just started getting the ETFs running.
Mm-hmm.
Right. We didn't know what kind of actual interest there was going to be in that, how that was going to be manipulated or whatnot. We didn't know how the election was going to go. And now we have not only just like financial institutions, but we have government institutions, municipal governments, state governments, the federal government, and all across the world are starting to look at accumulating and holding Bitcoin. It's just been adopted by the United States government. It's still, they're not actually accumulating yet. So you have a very limited time. Like you said, it's not going to happen overnight. Limited time doesn't mean within the next few months even.
Yeah.
Which it is limited. There is a short amount of time. I don't know that Bitcoin won't be traded, but we'll be trading Satoshis, not Bitcoins.
At some point, yeah. And a lot of the Bitcoin that the masses are going to be exposed to, unfortunately, much to my chagrin, are going to be packaged products from these larger institutional players, your asset under management companies and institutions. Nation states are involved now. Obviously, Bitcoin is a strategic reserve asset by executive order. It needs to be codified in law. And obviously, Cynthia Lummis and her working group announced last week, right after that they were meeting today. So they had their meeting this morning, and then they are issuing public statements now about what's happening and what they plan to do, which is the same Bitcoin Act bill that was already went through committee is just being reintroduced, right? And that plan is for accumulation. But Trump left the door open for direct accumulation from the Treasury as well. So there's a two-pronged approach here where the Treasury doesn't even need congressional approval in this case to accumulate Bitcoin budget neutral. And that means they can pull from anywhere, right? Anywhere that is considered budget neutral, they can just say, like, as long as it's not new spending, here you go. Here's some more Bitcoin. And this actually, I think, is much better than the Bitcoin Act, in my opinion. The Bitcoin Act has a challenge. Once passed, we know the regular cadence of which accumulation is going to occur by the U.S. government, right? Whereas for the Treasury, in terms of budget neutral spending, you won't know until they've already bought, right? So that is a beautiful way to approach it. I think it is bullish. Excuse my language. It's bullish as fuck. And sorry, hide your kids here. We're talking nasty.
I think just the high schoolers are getting home yet.
Yeah.
Don't worry.
It is absolutely bullish as fuck. And anybody who doesn't think it is silly.
It's right. It's bullish as fuck despite all the short-term price action.
Yep.
The short-term price action is set up from other stuff. And, we're still right. It really looks like we're really right on on cue as to where I didn't, 100K came faster than I thought, to be honest.
Yeah, I mean, it's something that throughout my analysis, I was looking at as a distinct possibility, including a new high before the halving was showing itself pretty early after the ETF launch and retraced to spike a monthly level at 38.5, like right on the dot for spot. Means that they wanted to buy off that monthly level, the big institutional players, and then price just absolutely ran from there. And it was very clear that it was going to make a new all-time high prior to the halving. That happened much quicker than most expected. It's not in the normal cycle theory is like, oh, hey, no, it's post-halving we get that. And then there's usually a little reaccumulation. Well, it happened with a new high, and then the reaccumulation happened, right?
And it was a kind of, I wouldn't call it a little reaccumulation.
Oh no, it was big. It was a big one. Right.
And now we have a reaccumulation.
Essentially, yeah, then that's kind of what we're seeing. And that's okay because lower prices allow for regular people to get involved in in this market before it all gets repackaged and sold to them in various manners. It's not that you're not going to have Bitcoin on centralized exchanges. They're going to be there, but they're going to have competition from the regular markets now. And that is where these packaged products are going to be sold. And, we might even see direct competitors to centralized exchanges from bigger players, like maybe that Texas exchange that Larry wants to boot up there with BlackRock, right? You never know. They've talked about it. They've been hinting that maybe they would want to get into like crypto exchange side of things to try and take on some of these larger players because they'd instantly be the largest player in the game, right? And what would they have to do? They'd have to fund up by buying the coins and then contributing liquidity to those exchanges. So it's its own little thing. We don't know if that's going to happen. That's just pure speculation. But, there's indications that this market is going to evolve in ways that we never expected. And here's my favorite part about this is there's a lot of people on the timeline that were uber bullish for extremely high prices very quickly that are now capitulating and saying, nope, it's over. It's a bear market. It's done. Well, we're in an uptrending structure on the monthly for Bitcoin. And I think that a lot of that is just engagement farming, to be quite honest, because I think that those larger individuals that are on that side of things understand that you need to see the structural breaks and changes on the monthly to actually start evaluating whether or not we're in a bear market. You call it a bear market with higher highs and higher lows on the monthly. It ain't a bear market, not yet. Could it turn into one? Sure, maybe. But front running that narrative by trying to pick highs or pick lows in that regard is just a fool's errand. And, we're seeing price rise pretty rapidly right now because of, price was hitting some key levels where we were looking for a potential pivot and a low possibly being set. And then you get some news that's coming out. Everybody's going to say, no, it was the news. It was the lummus and the accumulation, the Bitcoin Act, guys. That's why his price is rising. Like, really? No, it actually failed to close below 78. That's why. So price did dip down below and continued to fail to close below it on some of the major time frames. And price is naturally going to auction higher to try and find liquidity, right? In this case, we know this. Let them have their narratives. Let them talk about what they want to talk about. And then if they want to get into a deeper conversation about why price acts the way it does, then they can get into that deeper conversation. And maybe you can enlighten them as to how things go. But right, I will say this. Bitcoin Reserve. Last point. Bitcoin Reserve needs to be codified by Congress, because another president can come in and undo that executive order.
Right.
And that's what we don't want to see. So I am rooting for the Bitcoin Act, even though I think it's the most front runnable thing in history. So I'm glad that they have the budget neutral accumulation stuff in that executive order, but we need to see it codified in law in some manner.
Yeah, that is true. It would be better long term. It would likely be better for the space long term if that gets passed.
I would agree. I would agree.
But if you're looking to accumulate in the short term, it wouldn't hurt if it maybe
dumped.
got delayed.
Yeah, maybe it got hung up in Congress and price dumps out. If you're looking to accumulate, because if that thing's passed, that's a signal to the rest of the world that the Bitcoin arms race is on officially.
Right. Well, right now that's part of the issue is the media is still obviously putting Trump as like a rogue outlier. And so a lot of what he's doing, even though like I don't understand how they can actually come out opposing all the Doge stuff and turning over this corruption and waste and fraud, but they're successfully combating it seems too. You know, they got a lot of people.
Media is disingenuous.
I'm afraid so.
Oh,
no,
God.
Not this media. But
not this media. No. Are you telling me that Rachel Maddow could be lying to us?
Oh, well, maybe is it a lie if she truly in her heart believes it to be true?
Yes. I don't care how much she believes in the lie. It's still a lie. Yeah. I mean, is Anderson Cooper not giving us the complete story?
Anderson Vanderbilt Cooper, you mean?
Oh, yes. Former asset, former CIA. Yes. Anderson Cooper, that guy. Could he not be telling us the truth?
The only part of it that I would take issue with is the former. Yeah. We don't know. The former is still speculation, by the way. You can have two jobs at once, by the way. Are you telling me that ABC isn't in the tank? That NBC isn't in the tank? Are you telling me that they didn't get? Are you telling me that the Washington Post and NPR and all of these companies are you telling me that they could have possibly been getting USAID funding? Oh my gosh. You mean shocked that they had a vested interest in perpetrating the fraud in order to not lose the money they were getting out of it?
I am shocked by this. I am absolutely floored. I'm dumbfounded. I don't know what I'm going to do with my life now. I have to rethink everything.
Crazy. I could go on this.
Yes.
I could go on with this for a while, but I have 24 minutes to grab something to eat before.
Yeah, go ahead.
Art on Stacks. Love you, Landy. Great stuff. Thank you for joining us today. Thank you for all that tuned in. Vinny and GPSC both shouted us out in the comments. They enjoyed the show. I'm sure there's a lot of people. We actually had a good turnout. We had more numbers than we did last week. Great stuff today, man, and I appreciate you. Thank you all for tuning in. We are DeOrganized Media, coming at you live on Bitcoin Live Decentralized Broadcasting with Learn TA from Landy. You can get all of the episodes in the playlist on the DeOrganized YouTube channel. Check us out every Tuesday at 1 p.m. Eastern, 10 a.m. Pacific for all of you late guys. And we'll talk to you soon. Peace out.